The United States cannabis industry has grown exponentially over the past decade, fueled by legalization in multiple states, increased public acceptance, and the promise of substantial tax revenue. By 2025, the legal marijuana market in the U.S. is estimated to exceed $45 billion annually, attracting investments from private equity, venture capital, and publicly traded cannabis companies. While this economic boom appears promising on the surface, deeper analysis reveals a complex web of financial, social, and governmental factors that suggest the cannabis economy may be undermining the country's long-term stability. At the source, the cannabis industry is deeply fragmented and largely unregulated on a federal level. Although some states have established oversight boards, the lack of a unified regulatory framework creates loopholes that can be exploited by large corporations, criminal enterprises, and shadow operators. This fragmentation allows untraceable cash flows, tax avoidance, and sometimes outright illicit activity to flourish alongside legitimate operations. In states such as California, Oregon, and Colorado, reports show that a significant percentage of cannabis sales occur off the books, making it difficult for both regulators and law enforcement to monitor the industry effectively. Economic analysis highlights another concerning trend. While state governments benefit from tax revenue, the costs of regulation, enforcement, healthcare, and social services tied to cannabis use can offset much of the financial gain. Studies have shown that communities with high cannabis business density often experience increased rates of youth usage, impaired driving incidents, and public health burdens. Furthermore, the concentration of wealth within a few major cannabis corporations creates economic inequality within the industry itself, with small farmers and local businesses struggling to compete against well-funded conglomerates. Investors chasing high returns may inadvertently encourage monopolization, pushing smaller operators out of the market and centralizing control over a product that affects millions of lives. Capital access has also reshaped the industry in ways that exacerbate social and economic risks. Unlike traditional businesses, cannabis companies face federal banking restrictions, forcing them to operate primarily in cash. This cash-heavy model attracts theft, money laundering, and informal financial practices. Large investors with sufficient resources can dominate local markets, establish vertically integrated operations, and influence policy to favor corporate interests over public welfare. Meanwhile, average consumers, small entrepreneurs, and lower-income participants in the market may be left vulnerable, creating a system where access and control are heavily skewed toward the wealthy and politically connected. Government measures intended to regulate or mitigate risks have had mixed results. While legalization has reduced some black market activity, it has also created new opportunities for tax arbitrage, interstate trafficking, and the exploitation of legal loopholes. Enforcement disparities persist, with low-level offenders often facing harsher penalties than corporate entities that exploit regulatory gaps. Federal inaction, combined with state-level variation, means that public health, social equity, and financial stability are not consistently protected. In some cases, government support inadvertently legitimizes powerful corporate players, further entrenching inequality and consolidating economic control in the hands of a few. Beyond immediate economic effects, the U.S. cannabis industry poses long-term risks to social stability and public health. Communities with dense cannabis markets have reported rising rates of youth exposure, impaired driving incidents, and addiction-related health costs. While proponents argue that legalization reduces crime, data suggests that it can simultaneously create new forms of criminal activity, including unlicensed distribution, tax evasion, and organized diversion networks. The social impact is uneven, disproportionately affecting low-income and marginalized communities who often face higher enforcement rates and limited access to legitimate business opportunities, even as corporate entities consolidate control. The economic structure of the cannabis market also undermines broader financial stability. Vertically integrated conglomerates dominate supply chains, controlling production, distribution, and retail in ways that limit competition. Small farmers and independent operators struggle to remain viable, pushing many into debt or forcing them out of the market entirely. Federal banking restrictions exacerbate this problem by keeping the industry cash-heavy, which invites fraud, theft, and informal financial practices that undermine transparency. Investors seeking high returns may prioritize short-term profits over social responsibility, incentivizing aggressive expansion and monopolization that destabilizes local economies. Government policies, while intended to regulate the industry, often amplify these risks. State-level legalization creates a patchwork of rules, enforcement, and taxation that is difficult to manage, while federal inaction leaves gaps that powerful corporations exploit. Public health initiatives, social equity programs, and enforcement measures are inconsistently applied, leaving some populations vulnerable. In addition, the promise of tax revenue can drive states to expand licensing and sales even when evidence suggests social and health costs may outweigh economic benefits. This tension between immediate financial gain and long-term societal impact creates a precarious situation for local and national policymakers. The broader lesson is that an unregulated or poorly managed cannabis economy can erode both economic fairness and social cohesion. While the industry provides jobs, tax revenue, and legal access, the concentration of wealth and influence in a few corporate hands, combined with persistent public health and social risks, suggests that the U.S. may be trading short-term gain for long-term instability. The interplay of capital access, government policy, and social impact highlights a fundamental question. Can a society profit from a high-revenue industry while protecting its citizens, or does unrestrained growth inevitably create deeper structural problems? Ultimately, the U.S. cannabis economy serves as a cautionary tale. Its rapid expansion illustrates how lucrative markets can still harbor systemic risks that threaten economic equality, public health, and societal stability. Without coordinated regulation, oversight, and social safeguards, the industry risks concentrating wealth, exploiting vulnerable populations, and creating long-term consequences that could outweigh the immediate benefits. Understanding these dynamics is essential for anyone examining the intersection of finance, policy, and social responsibility in one of America's fastest-growing industries.